Welcome back to CryptoBanter.com. I'm Crypto Man Run, coming to you live every single day at 10 a.m. EST. Yeah, if you keep asking why do we come to you at 10 a.m. EST, and that's because we want to send our crypto love around the whole world, and we picked a time that's really good for everyone, or we hope it's good for everyone, because it's 7 a.m. in Los Angeles on the West Coast. Wakey, rise and shine. It's the middle of alt season. If you're in New York, it's 10 a.m. You should be in the swing of your day. Europe, you're almost going home. It's 3 p.m. for you guys, 5 p.m. here in Cape Town. We've got a big show for you today. And that's because, of course, today is all about Ethereum. Yep. Usually we make Bitcoin the master of everything, and we always start with Bitcoin news. But let's put that aside, because today it's all about Ethereum. And Ethereum broke the all-time high. It broke it this time with conviction and with volume. And you'll be surprised, because this actually may be the best time to be buying Ethereum. So we're going to look at whether this is a good time to be buying Ethereum, or whether you should wait for a pullback. And then we're going to talk about the pump of all pumps. Yeah, we're expecting the biggest pump you have ever seen for Bitcoin, and we've got some fundamentals driving this pump. We're going to look at those fundamentals and tell you why we think this might be the last chance to buy Bitcoin at these kind of levels. And no, this is not a meme. This is not one of these guys saying to you, oh, this is the last chance to buy Bitcoin under 35,000. We really think that there's going to be a market shift. And today we're going to talk to you about why we think there's going to be a market shift. And then we're going to talk about a new kind of pump on the markets. Yep, I don't know if you guys remember, but we used to talk about the Binance pump. Well, there's a new type of pump on the market, and that's called the Grayscale pump. And that's because they said they're going to list 5 new assets on their Grayscale trusts. And that is huge. And they sent those 5 assets pumping. But is that a sign? Should we be looking out to see what assets Grayscale is going to list and then ride the pumps like we used to do the Binance pumps and the Coinbase pumps? Well, that's another thing we're going to look at today. And then we're going to review some of our calls. Ever since we started making calls, we're going to review some of our calls. And then I've got 3 small cap gems for you. You know, I love the small cap gems. But we're going to talk about the small cap gems, 3 of them. And I think if you can get into these 3 small cap gems, I think these are going to be big winners. So if you want to see those guys, stay on this show until the end. Those small cap gems are coming till the end. And if you do watch us on YouTube, hit the like button, hit the subscribe button, give us some love, because that is how we spread our crypto content around the whole world. And you probably noticed that this channel is growing really fast. Today we're going to talk about the growth of this channel and why it's important for you to hit the like, subscribe, and the bell. Guys, if you don't know what that bell does, that bell informs you every time we do a show. So just by subscribing, you don't get the notifications that we're about to do a new show. You have to hit that bell button. And if you don't hit that bell button, then you don't know when we're doing a new show. And if you do hit that bell button, then Bitcoin will be pump. This is what my friend Ivan says.
Like, subscribe, bell button, all. 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 Number 1, smash the like as soon as possible. Number 2, smash the subscribe button, the bell button and all, the bell button and all, the bell button and all. It's a very important algorithm.
So not only will Bitcoin be pump, but this channel will be pump. And speaking about pump on this channel, we actually need your help. And that's because we are looking for animators or brand designers to help us with a new look and feel, not only for this show, but we're also launching 3 new shows right here on CryptoBanter.com. And we want someone who can bring life into YouTube shows, someone who can take memes and take crypto and mix it all up and help us create shows. You can work on a part-time basis or on a full-time basis. We don't really mind, but we need someone who knows the YouTube game, who knows the broadcast game, and who knows crypto. And we're looking for anyone. So please spread this far and wide. And if you think you do have what it takes, then I suggest you mail us some kind of portfolio or something to CryptoBanter.com or Neil@CryptoBanter.com, and let us know what you've done before, as well as what you think we should be doing to make our show better. And remember, if you do have feedback for our show, we really appreciate the feedback. We appreciate everything that you guys do. We appreciate the likes, we appreciate the subscribes, we appreciate the comments. You guys drive us. So if you do have comments, let us know. I got some really direct feedback for some of my videos on this weekend. They said, just get on with the content, forget about the intros. I don't take it personally. I'm going to get on with the content. And that's exactly what we're going to do right now. In fact, let's get on with this show. And let's talk about none other than the Ethereum pump. Yep, we had Ethereum breaking to new all-time highs this time, but this time it feels real. I don't know if you guys saw it. In fact, let me call up the charts, the Ethereum charts. Let's look at the charts. So let me share this chart with you guys right here. Have a look at that chart. So that is the Ethereum chart breaking through the all-time high, the previous all-time highs. But this time, if you look over here, it broke through with a lot of volume. You can see that there's a lot of volume going on here, and there's a big, big, big pump. You can see that this is like not one of those small breakouts. This is a real breakout. And in fact, probably even better is if we look at it on this time frame. Let me show you a different time frame, which I think will make a lot more perspective, give you guys a lot more perspective, and that is this one over here. So let me share this one with you guys. So let's have a look at this one. Let's take a In fact, let's try and maybe use another screen. But what I'm saying to you guys is that we've finally broken through the all-time high, the old all-time high. And this is actually a great time to be buying, because we need to be buying when there's a breakout and when Ethereum goes into price discovery territory. So this is where we are at the moment. Let's have a look here. If we look at the same chart that I showed you in a second, which is this one right over here. You've got Ethereum breaking out over here and going through all-time highs, and going through at all-time highs convincingly, not like the last time where it just shaved the all-time highs. This time we've gone through convincingly. And I want to show you something else. I want to show you the last time. So this is the pattern that we've had. So we've got this pattern where in 2018, on the 15th of January 2018, we touched the old all-time high. And then we went into a big, big, big bear market, as you can see. And we went through for a long, long, long bear market, almost a 2.5-year bear market, until we got to about here. And now we've come up and we've broken this all-time high convincingly. One thing you need to take note of is that we haven't had many pullbacks in this. If you look at this, we haven't had very many pullbacks. Even if you compare it to the old 2017 highs, we had many more pullbacks in 2017. We're now breaking through the all-time high, and whereas most people think that this is a time to be selling, we think this is a time you should be buying. And the reason why you should be buying now is because all the fundamentals have aligned for Ethereum. You've got, I don't know if you guys remember, but we gave you guys a maths formula, which is this formula over here, which says EIP 1559 plus CME futures plus adoption means that we're going to get some all-time highs for Ethereum. Now, EIP 1559 is a protocol upgrade to Ethereum, which effectively makes Ethereum deflationary. For those of you who don't know what deflationary means, it means that the number of tokens in the Ethereum ecosystem is actually going to start declining. So whereas Bitcoin prints more tokens with every block, Ethereum is actually going to start burning tokens. And they're going to do this through a protocol called EIP 1559, where a proportion of all the gas fees are going to be built. And that's going to decrease the supply of ETH. Now, you also remember that last week we looked at the total number of transactions on the Ethereum network. Now, what you'll notice is the total number of transactions on the Ethereum network are about 4 times the total number of transactions on the Bitcoin network. And that makes a hell of a lot of sense, because you've got these transactions, these DeFi transactions, which are currently very, very small DeFi transactions. And even though these transactions are small, they show that people are actually using the network. And the number of transactions on Ethereum was 4 times the number of transactions on Bitcoin. You've also got another big piece of news, a huge piece of news, and that is that next month, the Chicago Mercantile Exchange, which is a futures exchange, launches their futures contract on Ethereum. And this is set to give ETH a huge pump, because it's going to get the institutions to be buying ETH or to be looking at ETH. One more big thing that we need to remember about Ethereum is that the biggest buyer of tokens in the market, and that is Grayscale, hasn't yet started to buy Ethereum. In fact, let's look at the Grayscale buying from last week. Grayscale bought 30,000 to 29,598 Bitcoin. And they didn't buy Ethereum. In fact, if you look, they actually sold Ethereum. They sold 1,406 Ethereum, which means that The reason for that is they're in a closed period. They're not taking deposits for their Ethereum trust. And so we can expect a huge pump and a backlog when Grayscale start to buy these Ethereum tokens. So even though Bitcoin was struggling against resistance the whole weekend, you've got Ethereum, which was breaking new all-time highs. And I think that this is a decoupling that we're looking for. This is nothing new. If you've been watching the channel, we've said this multiple times. We said that what's going to happen is Bitcoin's going to run, then Bitcoin's going to start moving sideways, and then the people are going to take their profits from Bitcoin and move it into Ethereum and into the alts. And that's exactly what's happening. We're experiencing an altcoin run like nothing we've ever seen, or we're in the start of a new altcoin run, which is like nothing we've ever seen. And we're seeing a huge pump on Ethereum, which you can see over here. I want to show you guys one more chart. Let me show it to you guys over here. And this is a chart that you should probably show all the naysayers, all the Bitcoin maximalists. And that's this chart over here, which is the hold on, let me try and get you guys a better chart. Or in fact, you can see it over there. But this is the Ethereum versus BTC chart. And you can see that ever since about September 2019, this chart has been going up. In other words, the price of Ethereum compared to Bitcoin is starting to go up. And so that means that Ethereum is actually improving. And if you look over here, you used to be able to get 0.1 ETH, or 10 ETH used to buy you a Bitcoin, whereas now it's about 25 ETH buying you a Bitcoin. So there's a big chance that we're going to get this like cup shape happening like this. And so I think that Ethereum is going to really start outperforming Bitcoin now for the next couple of months. And that, of course, means that we're going to get into this massive alt season. And talking about alt season, in fact, we'll talk about alt season a bit later on in the show, because I want to talk to you about something that is completely huge. And that is what I call the pump of all pumps. And this is a pump that's coming up like very, very, very soon. It's coming on up right now. And that I think that we're about to get the biggest pump in the world for Bitcoin. And that's because I think there's going to be a fundamental shift in the market. If you want to talk more about the fundamental shift in the market, let's look at the market in 2017. In 2017, we had people, retail investors buying Bitcoin, and they drove the price up in 2017. In 2017, some funds also started to buy Bitcoin. 2017, 2018, and the beginning of 2020, we had these funds buying Bitcoin. But today we've got a new type of investor. And this investor has a lot more money than the retail investor and a lot more money than the funds. And that, of course, is the corporate treasuries. And Michael Saylor was the first guy to start this. In fact, he started a movement, as you guys know, and he took MicroStrategy's corporate treasury, the money that they had on their balance sheet, and he invested it into Bitcoin. And other corporates started to look at this, and Square also invested $50 million into Bitcoin. Now, MicroStrategy has been buying and buying and buying. In fact, they bought another $10 million worth of Bitcoin last week to add to their $1 billion worth of Bitcoin. But that's not what it's all about. I want to show you guys an interview with Michael Saylor on CNBC. Let's have a look at what he said.
To play, stock market as we typically do, but what's the best case scenario for the price of Bitcoin? Like, what are you looking for? What are you planning? Because I would imagine at some point this has to come up on the earnings call, which I believe is within a week or so from now.
Well, look, I mean, Bitcoin's a digital monetary network, and the asset itself is the technically superior asset. It's the ideal institutional safe haven asset. So what's the future? The future is to flip gold. It's going to replace gold. And then after it replaces gold, it's going to become the monetary index that replaces stock indexes like the S&P 500, the Dow, the bond indexes, and the like, because people that want to store their money, they want a safe haven store of value over the next 10 to 30 years, are going to be attracted to a digital asset that has no inflation in it.
Yeah, and I think you yourself in the past have basically said that your P&L is a software company, your balance sheet is invested in Bitcoin, though. That being said, the stock is moving. Whichever way Bitcoin goes on a daily basis, the stock is moving right along with it. It's almost become a stock market proxy for crypto. How do you feel about that?
Well, corporations everywhere in the world that are cash rich, they're looking at their cash and they're saying cash is a liability. They have to find an asset that's going to appreciate faster than the rate of monetary expansion. So I think what you're going to see this year is corporations are going to embrace Bitcoin either on their balance sheet like we have, because it converts a liability into an asset, or they're going to do what Square and PayPal and Grayscale have done, and they're going to build Bitcoin into their products and services, because you're talking about them all the time. Their stocks are going up. Grayscale's from 2 billion to 20 billion in assets under management in 12 months. There's a reason why. They have differentiated their products and their services with a big tech monetary network that's exploding at 200% a year. I think it's going to continue for the decade. And, everybody with cash has that opportunity. So I think our employees are delighted, our shareholders are delighted, and I think you're going to see an avalanche of new companies do the same thing, either on their balance sheet or on their P&L.
So that's Michael Saylor, and he's been making the headlines, and he's been making all the right headlines for all the right reasons. And I think he's got an amazing formula. His formula is very simple. Buy Bitcoin, put it on your balance sheet. Bitcoin went up. And now basically what he's doing is he's created this corporate FOMO, because other corporates are looking at this and they're going, hold on a second. I also want to have a bit of this. MicroStrategy has made way more money out of Bitcoin than they've ever made as a corporation. And so other investors or other Wall Street people, or other corporate treasuries are looking at this and they're going, hold on, maybe I should also do that. Maybe I should do it with 5% or maybe 10% of my money. That's all I need. And if I do that, then maybe I can get much more returns. And so what Michael Saylor is actually doing, he's become a spokesman for Bitcoin. Let me play you a little bit more of that interview. I think it's super interesting.
Michael, again, I'm a huge admirer of what you guys and gals are doing there. So my next question would be, though, just to sort of, again, try to take the other side. What are concerns around regulation under the Biden administration moving forward?
There's every indication that this incoming class of regulators are informed, they're thoughtful, they're progressive. They know how important digital assets are to the competitiveness of the financial industry, both in the United States and also to the progression across the world. I think that crypto assets and Bitcoin has had a little bit of regulatory ambiguity in it, regulatory clarity, and that is bringing it into parity with other assets that institutions hold, like stocks and bonds. That parity and clarity is going to be a great thing. It's going to cause an avalanche of money to flow from institutions and corporations into Bitcoin. And so they're welcoming it, and I welcome it. I think it's going to be a good thing for the industry.
Yeah, of course, we all welcome it. We think it's going to be an amazing thing for the industry. But it's great to see that he's saying what we said, and that's that Bitcoin Biden, or Joe Biden, is going to be the most regulation-friendly or Bitcoin-friendly American president, whether he likes it or not, because part of his policies are actually printing more money and more stimulus. We know that Biden's all about stimulus, and they're talking about another $2 trillion in stimulus coming up very soon. So that's why he's doing it. He's also appointed Gary Gensler as the head of the SEC, and Gary Gensler is a blockchain professor at MIT. So the big news is not what I've just showed you. The big news is that Michael Saylor was the first guy, and he's created this corporate FOMO around Bitcoin, or investing your corporate treasury in Bitcoin. Now, remember, these companies have way more money on their balance sheets than any hedge fund can even imagine about putting into Bitcoin. And so this is why I'm so excited. Listen to
those
this.
Lines, Michael. I realized you made headlines not that long ago for having an exchange on Twitter with Elon Musk around the topic of Bitcoin. And I also realized that you're probably not going to comment on what those conversations offline have looked like, if they've actually taken place. But you are now planning on a conference, Bitcoin for Corporations. What has the response from other companies been? What are you expecting in terms of this conference?
We're going to have thousands of executives, officers, and directors and advisors of corporations coming together in the first week of February. They all want to figure out how to plug Bitcoin into their balance sheet or their P&L. We're going to publish our playbook, all of our accounting guidance, our legal guidance, all the work we did over the course of months in order to get ready to do this as a publicly traded company. And we're going to open source it and make it available to everybody, with the thought of saving each of them millions of dollars and weeks, if not months, in order to make this an easier transition.
Who's going?
It's going to be a great event.
Who's going?
I can't tell you now, but you'll find out. You're welcome to come.
Okay. Michael Saylor, I may just take you up on that. Thank you.
Thanks for having me.
So that's the beautiful news. What he's done is he's outsourcing his whole playbook. Guys, millions of dollars in research, legal fees of how to buy Bitcoin and how to store it. And he's doing this with all his partners in a special day on the 3rd and a special 2 days on the 3rd and 4th of February. This is what it looks like at the moment. And he's doing it with all his partners. So you can see that what he's doing is he's bringing in people from MicroStrategy, people from Coinbase, people from Gemini, people from Fidelity, and they're going to teach corporates everything that corporates need to know about putting some of their treasury into Bitcoin. Now, this is huge news because I have a feeling that this is going to be the first of many events. And Michael Saylor is extremely incentivized to help Americans or corporate America move their balance sheet into crypto. And for me, this means that there is a last chance to buy yourself some Bitcoin at these old prices. You're not going to see Bitcoin at these prices for long, because once the corporates start to realize that they can put their treasuries into it, I think that we're going to be chasing a market cap even bigger than gold. I've got Crypto Birb with me. Crypto Birb, always good to have you on the show. Welcome back, my friend.
Hey guys, how are you doing? Good to see you, Ren.
Good to see you, man. Crypto Birb, what do you think of Ethereum breaking the new all-time high? I said that even although now it has broken its all-time high, it's a great time to be buying. Do you agree with that thesis? Do you think it is a good time to be buying when Ethereum has hit the all-time high?
Well, in general, I prefer to buy low rather than buy high, right? So the thing I'd say, in general, breaking the all-time high is bullish, right? So this triggers the buy signal for the high time frame investors. So it's mainly about the time horizon, because high time frame horizon has just been confirmed to go higher now of the all-time highs. But it doesn't mean necessarily that on the intraday basis, this is actually the best place to enter, right? So two different sort of like just stories to compare between the higher and lower timeframes for sure.
So let's look at if you can call up your chart, let's have a look at your Ethereum chart and just see what you're calling on Ethereum. And then I want to look at Bitcoin, because I think that Bitcoin is also due for the pump of all pumps from a fundamental basis. Let's try and compare that to what the technicals say and see if we can align the fundamentals and the technicals.
Yeah, of course. Just let me launch that. Make sure that I screenshot that out properly. There we go. It should be visible already, I suppose. Okay. So starting off with Ethereum, then. Okay. What we are looking on is definitely, we are in this old resistance area, which is 2017 highs, right? Actually, and it was 1425 as far as I can recall, which was pretty good number. But we also need to remember that whatever was priced against dollar back then has pretty much like completely different value right now because of the dollar inflation, right? So 3 years later, the same dollar, actually not even 3 years later, just like 1 year later, after they printed so much money after COVID March crashes, the dollar pretty much like depreciated very heavily in value. So what we're looking at right now is completely different value of Ethereum itself, although it's showing similar levels against USD, right? But it doesn't really include the inflation. So what we're looking on right now is just information that it's supposed to go much, much higher, because by being at these levels that we're looking on right now, being here, doesn't mean in practice being here in 2017, right? So 2017 peaks, because of lower inflation back then in the day, or just give me the feedback information that we could expect much higher levels actually, right? So right now when we already sort of like flirting, was that
logically, if the dollar has depreciated and Ethereum has much more adoption, it's now got EIP 1559, which is the deflationary protocol that's being implemented. Surely this all means that we are way undervalued on Ethereum. Not actually even undervalued, we're way undervalued.
Of course, just look it up. I mean, let me play the candlestick chart, right? And we are looking, this is actually Binance, right? But, the peak.
We're looking at the peak, BTC chart. That's a very interesting chart.
Exactly, right?
We're actually we're seeing that from September 2018, we're actually on this upward trend.
Exactly, right. We're locally uptrending. I mean, in the past couple of months, of course, there has been definitely a very, very steady uptrend. Not to mention, the overall very heavy decline, like 2x, going on since December last year. December is always strong, which I kept repeating. And I've also actually watched the Banter the other day, probably like one of the first times that I actually was with Iran. I was talking about Ethereum breaking the all-time highs being just a matter of time, so which we're pretty much like looking at right now. So the key resistance is, this is Bitcoin chart. I mean, the Ethereum versus Bitcoin pair, and it just tells you, that at the moment of a peak, Ethereum was heavily sort of like squeezed like a lemon. There was not really much upside potential because Bitcoin was pretty much like getting weaker and Ethereum was taking the lead, So right now it's completely the opposite edge, right? We are looking at a very strong Bitcoin and Ethereum just sort of like getting awakened. So this much upside is still to be made, on the contrary to sort of like what it looked like in 2017. So which tells me that we can easily just go, just based on the BTC pricing, we have about 170, 180 levels, like ROI levels from here, to reach the old sort of like peak against BTC, which tells me again more that assuming Bitcoin grows even more, we can go easily 3x, 4x from this point for Ethereum, in my opinion, 3, 4, 5K levels.
I have to ask you a question. Do you believe with enough conviction that you would swap your Bitcoin for Ethereum today on this, or actually take from your HODL portfolio and move some of your Bitcoin into Ethereum? I'll tell you why. I did that. So I took a large portion of my Bitcoin holdings and I moved them into Ethereum. And I always promised I'd never sell Bitcoin. But to me, I just see that Ethereum has so much better legs and so many better fundamentals at the moment. And now I'm looking at the technicals, and the technicals are kind of confirming the same thing. Would you swap some of your Bitcoin holdings, your long-term Bitcoin holdings, into Ethereum now?
Not really, not really, because the truth is that, it doesn't mean your strategy, it can be very profitable, definitely, and I do think it will be profitable, but it doesn't mean that, everybody needs to follow what I do, for example, right? So everybody has their own sort of like a different setup, their own different financial situation. People are dealing with, with divorces, with depressions. Your perception over the money, like of the money over the time changes and evolves. So we are all kind of sort of like on different levels, which in my opinion, currently for my very situation in my life, for my financials, my funds, I do have the conviction that sticking with Bitcoin right now pretty much works for me better, right? And I stick with what makes me money, which I know for sure because the trading is a game of probabilities. So in this very context, I feel this is definitely a good idea to have exposure to Ethereum, but whether I swap it all instantly just right now, I mean, fundamentals have always been there. This doesn't really appear like yesterday. This didn't appear yesterday or 2 weeks ago, so it's nothing new. So swapping that, I would not be sort of like brave enough to leave Bitcoin completely just for the sake of Ethereum, although it doesn't mean it could not be profitable. Definitely.
Let's look at the Bitcoin chart itself. So I've seen the Ethereum chart. You've done a great job explaining it to us, and I mean, I'm really think that from what you're saying, I'm confident that my thesis that we've broken the all-time high and we're now in this new price discovery area, I think is good. And I think there's a lot of upside for Ethereum to play catch up to where Bitcoin is doing it. And that's especially because the fundamentals of Ethereum and Bitcoin are actually quite aligned. So I kind of think that Ethereum will follow the same path that Bitcoin followed. Let's look at Bitcoin. What are you calling on Bitcoin? We had Bitcoin really struggling to stay above the support levels this weekend while Ethereum was like breaking through all-time highs. Talk to me about what your charts are saying.
Yeah, perfect. So charts are saying to me, especially on the lower time frames, because we are looking at the correction. Probably the last time I was here with Iran again, I was talking about January and February being usually corrective months, and this is exactly what we are seeing. We were looking just a couple of days ago, we were looking at the total 32% almost decline, measured from the peak of 42,000. Right now, the sort of like floor for Bitcoin appeared to be like 28,800, 28,600, something like this, depending on the exchanges. This chart actually itself presents a very good sort of like a brand new Birb Pro indicator, which is just freshly launched. It's unavailable to public yet, so this is sort of like a snippet. But long story short, it just tells me how we are still remaining to be in the sort of like a just consolidation, downward oriented consolidation period, corrective wave, whatever you name that. We are struggling right now. right? So it's my sort of like idea, assumed we circle back towards lower levels like 2300, 23,000, 25,000. And I still need to believe it's valid. The correction idea, the correction sort of like a setup formula has not been invalidated yet, which means that I need to rely on that. And why is that? Very clear points. We are looking at the Burbicator Pro bands, the volatility bands, which clearly show and point a downward orientation. And until it's downward, you need to assume it's a downside correction, right? So anything pretty much like also being after the twist, of the average and of the clouds for the B Pro, you see we are in the grayish area. Grayish for me, for the Burbicator indications is pretty much like filled with supply, is filled with resistances. So I would not necessarily be brave enough to long anything over over 3,300 just right now. I'm still staying sort of like flat, and like this main idea, this invalidation towards the 23, 26,000 levels, in my opinion, is breaking and reclaiming this area of 3,600, 36,000, with the proper breakout retest, right? So it doesn't need to only break out on the upper side, but also needs to successfully retest it, because we see a lot of sort of like swing failures that you see, just some consolidation going on below the resistance, and actual push above triggers for long.
You're looking for a breakout, then you're looking for it to come back, and then you want it to go back up and then you'd be convinced that Bitcoin is on the upward. And currently, for those viewers that are listening to us and not looking, that level that you're looking for it to break out, it looks like it's somewhere around 37,500. What is that level?
It's 36,000 actually right now. Because as I said, the main indication for me is breaking, invalidating this, reclaiming this area. Reclaim means closure of the higher time frame, which is, if you close the week or the day, the candle of higher time frame above this level, through this level, that tells you the story that the intraday is kind of like just inside of this price action has confirmed the breakout above, which is, as I said, so far the correction which we are seeing has been printing nothing but swing failures, right? Which is the situation where after the breakout, we are not looking at the actual continuation to the downside, but instead it's trapping the longs, the light bulls, right? And it's just following downside again, invalidating this sort of like a support level, right? So that's sort of like what I'm looking at.
All right, Birb, we've got time for one altcoin. Which is your favorite altcoin today for a buy? I'd be very interested to know. We're limited time today, but I know that you've got a whole lot of altcoin calls. Pick one that you really think is the best one at the moment.
So I need to take a second, right? But definitely, I've been super bullish on YFI. I've been super bullish on linear finance. It's all pretty much like linear finance since the time I spoke about it. It's actually 200% up, if I'm not mistaken. So it's quite a good result. So locally, probably not this just yet, right? But if I were to point out one sort of like just altcoin, let's say, that I'm a big fan of right now, is I would definitely long the actual breakout, above this trend line, this horizontal trend at this resistance level, YFI, right? And I've been bullish. Fundamentally, I'm very close with the team, of course. So I know what they're working on very exclusively. It's pretty impressive. And technicals and fundamentals seem to follow that, right? So when you see breakout retest over the actual resistance and the all-time highs, well, the all-time highs are bullish, right? So follow up on the breakout retest, and I think you should be able to do well. Technical sort of like range for that is the size of the base, which is pretty much like $2,000, which can take us all the way up to $6,000, just like I probably recently touched upon.
I must say, I agree with you on YFI from a fundamental point of view. I'm much more a fundamentals guy. And I think from a fundamentals point of view, they're doing amazing things. So I think we'll get them onto the show. We'll get someone from the community onto the show to tell us what they're doing. And then we'll compare the technicals to the fundamentals. Birb, we are running out of time. We've got a huge show today. So thank you so much. We need more of you. We need you to come on time so we can have more of you. We love having you on the show. Always gets amazing feedback. But thank you so much, my friend.
Much loves. Stay safe.
My friend. Alrighty, and next up on the show, we're going to be talking about a new pump in town. Yep, there is a new pump in town. I know you guys remember the Binance pump, and that we used to talk about when there was a pump on Binance. And we used to wait for tokens or get rumors of tokens that were going to be listed on Binance. And then we knew that a whole community would be able to go and buy them. But there's a new pump in town, and let me tell you, she is gorgeous. She is the Grayscale pump. And that is because Grayscale announced that, or filed that they're going to potentially list 5 new Grayscale trusts. These are the 5 trusts. Let's have a look at the 5 trusts over here. The trusts, I don't know how they choose their trusts, because these are not the tokens that I would have had, except for maybe I would have gone for Tezos. I would have maybe gone for Chainlink. But if you look at what they've got here, they've got Tezos, they've got Chainlink, they've got Basic Attention Token, they've got Decentraland, and they got Live Peer. What I want you guys to see here is I want you guys to see what a Grayscale pump does. So Tezos, before the Grayscale pump, was trading at under $2.40, and it went straight to $3.40 with the pump. Chainlink was trading at about $18 and then went all the way up to about $25. Basic Attention Token went from 22 cents to about 36 cents. Decentraland, which is the mana token, which is the token that's used in this Decentraland virtual life or second life protocol, that went from about 10 cents all the way up to 30 cents or 20 cents. And then you got Live Peer. Live Peer was by far the biggest winner. It went from about $2 to about $6. So great news that Grayscale are announcing new trusts, but how the hell are they getting these trusts? That's what I want to know. How are they deciding to choose trusts like Tezos, Chainlink? I mean, I love the fact that they've chosen Chainlink, but where did you get Decentraland and Mana and Basic Attention Token? I mean, Live Peer of all tokens, love the token, but don't think that this is what we should be bringing Americans, or certainly institutional Americans. Anyway, let's stop complaining about what Grayscale are doing, and let's start thanking you, our community, because I want to look at our calls and our community. So first of all, I want to give a big shout out to you guys, our community. First of all, I want to thank you all for coming here each and every day, for commenting, for liking, for subscribing. We couldn't have done this without you, and we've achieved some incredible, amazing results. Let's have a look at some of our results. So in just 2 months, guys, I remind you that this station is 2 months old. And in the last 2 months, we've got 20,000 regular daily viewers across all our mediums. That is huge. No other channel in 2 months has built 20,000 regular viewers. We've got over 7,500 people in our Telegram group. Now, if you want live information all day long, the place to go is the Crypto Banter Telegram group or my Twitter. That's where we break news each and every day. We've got this live show, which happens at 10 a.m. EST, and we're introducing 3 more live shows in the next 30 days because we're on a mission. We're on a mission to bring you 24/7 live streaming content that you guys can actually trade on. And that's really our mission. But in realizing this mission, we are also very, very, very aware of the ethics of maintaining our ethics and our integrity. We're entering an altcoin run. In this altcoin run, things are going to go up and things are going to go down. They're going to be massive pumps. They're going to be pump and dumps. And we are gung-ho on keeping our integrity. And in order to do that, we commit to providing you with credible information for as much as we can. And what does that mean? It means the following. It means that, A, we are going to do research on every call that we bring you. We may not be the first guys to bring you the call, but we will do research on everything that we bring you. And we will do videos like the ones that we have been doing, which tell you why we think you should be buying what you should be buying. Then we are probably the only YouTube channel that I know that doesn't accept any form of payment, not in tokens and not in cash for featuring projects. Yep, guys, it's simple. Even for $1 million, we will not feature any token on our platform. We don't do paid features at all. We don't take payment from tokens from projects in the form of tokens in their projects. Why? Because we want to keep our integrity. We want to make sure that every time that we make a call, you know that it's a well-researched call, and you don't have to think twice as to whether or not I have been paid by the project to show you the project. We don't accept payment for projects. Doesn't matter what the amount is. Our credibility is everything that we have, and we're going to make sure that we give you well-researched, unpaid promotions. We may from time to time have sponsorships and have advertisements, but they'll be marked sponsored segment or they'll be marked advertisement. So you can count that we are never, ever, 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 ever going to accept payment for tokens. And I actually encourage other YouTubers to follow my lead and do the same. Let's get credible calls and not have our viewers keep thinking about whether or not these producers or presenters have been paid to shill the token. We need credibility in the space, and we are going to lead that credibility. I must say, though, from time to time, we will feature tokens where I personally have invested or some of the other hosts have personally invested. And we've done that with some of our calls over here. It's important to know that when we do this, we buy the tokens at the market value at the time. So if you look at some of our calls, when we first discovered the Birb token was at $5. I bought those tokens on Uniswap for $5, for $10, for $15, and for $20. We started calling Arweave. Arweave did a 3x since we called it. It's one of my favorite tokens. We did a video. I bought those tokens in the private sale and I bought those tokens on the market. And we've never, ever, ever, and will never accept payment from any of these tokens to be featured. We get about 100 requests a day to be featured on this channel, and we simply will not do it. We may have adverts, we may have sponsor slots, but one thing we're never going to do is accept payment or payment in tokens or payment in money for featuring tokens. Let's look at some of our calls because I think that's quite important. So we've made a lot of calls in the last while, but some of them I want to talk to you about. So the first call I want to talk to you guys about is Arweave. So Arweave has done 3x. Today, if you look at Arweave, Arweave's at a market capitalization on a fully diluted basis of about $250 million. That is a file storage protocol, which is getting the network effect. And they've got this thing called the permaweb, which stores decentralized data forever with one payment. Now, even though Arweave has already done a 3x, it still has a 20x in it. And that's if you just compare it to its nearest peer, which is Filecoin. Also, Arweave isn't on any of the big exchanges yet. It's not on Coinbase. It's not on Binance. Even though I understand that they have been offered to be on there, the team is much more focused on actually building the project. Then we called Birb. Let's have a look at Birb protocol because I think this is one of our big success stories. We were the first channel, the first crypto channel to call Birb. And we discovered this token at about $4 or $5. This weekend, Birb went to about $130 or something along those lines. Let's have a look at it right here. So as you guys can see, Birb is now at $108, but even at $108, it only has a market cap of $8.5 million. Now, if Birb just became 10% of Chainlink, 5% of Chainlink, it would have to at least 100x from here. So there's a lot of room in Birb, even though it's at an $8 million market cap. But remember, you're dealing with small cap gems here. These small caps are risky. This team has yet to deliver a great product, even though what they're working on seems amazing. We want to see the product and we want to be convinced. You're playing in very, very, very risky territory here, but that's why the returns are so good. Let's look at some of our other coins here. We called Elrond. We had them on our show. Since then, Elrond's done a 5x. We still think that there's room in Elrond. And again, we called KeeperDAO, and KeeperDAO since then has done an 8x. But now I want to talk to you guys about something that's much, much, much more important than making money, and that is taking profits. And I want to talk to you guys specifically around the psychology of taking profits in a bull market, because there's nothing worse than selling. Let's say, for example, I sold a whole lot of Arweave tokens this week, and I sold them at $5, and I watched Arweave go from $5 to $6. And the question is, how do I reconcile selling and taking profits in a bull market? Because you always think that you're going to miss out. But guys, this is a very, very, very important part of trading, and that is taking profits. If you don't take profits when the market comes down, you're going to convince yourself to hold, and you're going to convince yourself to hold, and you're going to convince yourself to hold. And if you do that, effectively, you're going to land up with a bag full of coins. You would have been up a lot of money in the past, and then you would lose all your money. But how do you do this, and how do you reconcile taking profits in a bull market? Well, the answer is very simple. You start off with a trading strategy. Don't trade without a strategy. You have to have a trading strategy. And my trading strategy is say, I'll buy the token at X. If the token goes down by a certain amount, I'm going to sell my position. That's what you call a stop loss. And then I do that religiously. And just by the way, I heard a great tip. If you want to be vigilant about your stop losses, give your stop losses to a friend of yours and tell your friend to execute your stop losses for you. Because chances are, if your token goes down, you're not going to phone your friend and say, look, just reduce the stop loss, because that's quite embarrassing. So give your stop loss to your friend if you don't have the discipline. The next thing is, when I do a trading strategy, is I decide early on in the game when I'm going to take profits and how much profit I'm going to take. And that's a very big part of this. Now, I bought some of the Arweave tokens at $3.50. And I made a pact that I said part of my strategy was that at $5, I'm going to pull out some of my investment. So I pulled out some of my investment. But in order not to get FOMO in this market, because this market is going up, I break up where I put my investment. And I want to show you guys this chart that I did the other day. I hope I've still got it here. I haven't got it, unfortunately. But what I've said is, when you take profits, in order not to get the FOMO, I break up the profits and I put half of the profits or half the money that I sell, I put it back into Bitcoin, Ethereum, and DOT. And that's because those three have already got the network effect. And that means that even if the market continues to pump, I'm going to get some of the pump in the Bitcoin, Ethereum, and DOT that I've invested in. If the market collapses, the altcoins will go down way quicker than Bitcoin, Ethereum, and DOT. And that means that I'm not as exposed. The rest of the profits I divide into two pockets. So one pocket goes into Bitcoin, Ethereum, and DOT, and then I've got two more pockets. One is US dollars that I'm going to remove from my crypto investments. And that is because I feel that I'm becoming overexposed to crypto in a bull market. I'm starting to make money and I want to get some money back into my US dollar portfolio and buy other assets. And the last part I put back into other investments, which are going to make me 100x. So how I justify this is I say, look, if Arweave has already done a 10x or a 15x or Bird's done a 20x, let me take some of the money and invest it into another token that can do 100x. And so if you do that, you won't get such FOMO when you feel you're pulling out money and, I sold it and the price went down. And I recommend that you guys employ or deploy a similar strategy. You have to have a trading strategy. If you're trading without a strategy, you're going to fail. Your emotions are going to get the better of you. We are all human. We're all about emotions. I'm watching the comment here. It says, one of the comments is, dreams come true. You just got to put that work in. This is that work. Here I am. I'm doing the work. I'm sharing my experience with you. I've made a lot of money in crypto, and I want to share with you how I've made that money. And it's not through following people on Twitter and buying shitcoins. It's doing research and having a strategy. And that's exactly what I'm doing. So let's look at, let me remind you guys that strategy. You set yourself a sell point. And no matter what happens, when you get to that point, you sell. You don't hold and say, let me see if it goes up. You say, I'm going to sell 10% of my tokens at a certain level. When that happens, you sell. You take 30% of the money. You put it into Bitcoin, Ethereum, and DOT. And that way, if the market continues to run, those three will go up. And maybe you're not going to get as many returns as the altcoins, but you're still going to get some exposure. Take 1/3 of it and put it into cash. Take it out of the system. Put it away, buy property, get money out of the crypto ecosystem. Because remember, when crypto crashes, it's all going to come together. It's all going to come together down like a house of cards. Well, maybe not like a house of cards, but when crypto crashes, everything in crypto will crash. And you don't want to be too exposed to crypto when that happens. And the last part is put some money so that you can invest more money into 100x's. And so, okay, maybe you'll miss 10% up in a token, but you'll get 100x in another token. And that's effectively what I do. So speaking of what I do, I promised you guys that what I'm going to do today is I'm going to talk to you guys about 3 altcoin gems that may have 50x potential. Now, I want to caution you guys. Every time we talk about these altcoin gems, we're talking about extremely, extremely, extremely high risk projects. And this means that you should invest very, very small, very, very, very small amounts, $1,000, $100, small amounts, so that if you lose them, you don't really care. But if they go up to 100x or 50x or 30x, you've got yourself $30,000. And then you can use that $30,000 to invest in other tokens. So again, small amounts that you're going to lose, that you're not going to stress about. Because remember, if you stress, you're going to make bad trading decisions. And we don't want you guys to make bad trading decisions. We want you guys to be professional traders and to make money. So put in amounts that you don't mind losing. The amount of money that I put into Bird, I don't mind losing. If I lose it, great. I've made 50x on other tokens, 100x's on other tokens. And so I don't mind losing 1x on an investment. Do the research. Listen to YouTube videos like this. Do your own research and make sure before you buy these things that you do that. And so now what I want to do is I want to talk to you about 3 small cap gems that I think are going to do 100x or 50x or something along those lines. And I want to start off with the first one. And the first one is a protocol called Bridge Mutual. This protocol is being launched on Polkastarter this weekend. Yep, Saturday the 30th, it's being launched on Polkastarter. Bridge Mutual is a play in the crypto insurance industry. And not only does Bridge Mutual insure smart contracts or DeFi contracts, but it also insures money on centralized exchanges and stablecoins. Why am I so gung-ho on this token? Well, first of all, I'm gung-ho on the industry. We can't have a DeFi industry without real insurances. No bank, no big institution is going to put money into an industry that doesn't have proper insurance. And I think that the insurance sector in blockchain is currently very underserved. You've got tokens like Nexus Mutual and Cover Protocol and many others, some who have already been compromised. Now, just because they've been compromised doesn't mean that I'm bearish on them, because I think these compromises on these insurance protocols actually make them better. We're going to have a lot of compromises between now and when we have a big ecosystem. And those that survive are the ones that you should be investing in. So if you look at Nexus Mutual, the owner's wallet was hacked, or the founder's wallet was hacked. If you look at Cover Protocol, they were compromised, but they're back. And they found a way to fix it. And those are the type of protocols that you want to be investing in. Why am I so gung-ho on Bridge Protocol? Well, first of all, let's look at the interface that Bridge Protocol has. It's a very simple, clean interface that allows people to invest pretty easily. And what you do is effectively, if you're an insurer, if you want to insure smart contracts, you deposit money in USDC or stablecoins and you start earning BMI tokens, which is the Bridge Mutual token. And then you can stake those BMI tokens, and that is also the governance token that helps you make decisions on the network. This is where Bridge Mutual really differentiates themselves, and that is the decisions on the network. Because if you think about what insurance actually is actually a set of decisions. The first decision is, what kind of risks should we insure? The next decision is, should we pay out? And you want to be making good decisions. And this is where Bridge Mutual really has the upper hand on all their competitors. The first thing is, the more money you stake, the more you cover insured events, the more BMI or native tokens that you earn on Bridge Protocol. The more tokens you earn, the more you can vote in the governance thing. Now, they have come up with a system where if you make bad calls ongoing, you are unincentivized or disincentivized to remain, and your calls become less and less and less valuable. And therefore, what they're saying is, we will create an insurance with good decision makers, because the good decision makers will be well incentivized, and the bad decision makers, the guys that vote against the trend many times, will actually be eliminated. And so you're counting on an insurance protocol that is fully decentralized, where the decisions are made by the community, and the community is getting smarter and smarter and smarter, or certainly the staking community is getting smarter and smarter and smarter. As I said to you, the interface looks super, super, super good. As you can see over here, this is if you press the button to buy a policy, you can buy any one of these policies. And then there's a whole lot of decisions that you can make. You can vote on claims, and there's a whole lot of stuff doing that. If you want to get into Bridge Mutual, the way to get into Bridge Mutual is to go to Polkastarter, because Polkastarter is having a sale this week. And the one thing I must say about Bridge Mutual is that the price that the private round people paid and the price that the Polkastarter people paid is exactly the same. It's 12.5 cents per token, and that puts the protocol's valuation on about $20 million. Now, when you look at a $20 million valuation, and you say, okay, there's Nexus Mutual with a market cap of over $100 million, and Cover Protocol, which had a market cap of over $100 million, you know there's a burning need for insurance players. And I think that Bridge Mutual may be the gem in the space. What I'm going to try and do is I'm going to try and get someone from the team to come talk to us later this week before they go into Polkastarter to give you guys some more insights as to whether or not you guys should be buying this protocol. And that brings me to my next gem. So let's look at the next gem. We are running out of time, so I'm going to go pretty quickly. The next gem that I've got here is Ramp DeFi. Now, of course, you guys know that Ramp DeFi has received all the good coverage, and it has had a bit of a run. In fact, I want to show you the run that it's had because I think it's super important that you know how much tokens have run before you make a decision to buy in. So Ramp DeFi is currently on a market cap of about $45 million. And if you look at the chart for the last 30 days, it's absolutely scary. This thing's gone from about 5 cents or 4 cents, and today it's trading at about 30 cents. So there's already been around a 10x in Ramp DeFi. But nonetheless, I'm super bullish about Ramp, and I'll tell you why I'm super bullish about Ramp. If you look about what Ramp DeFi does, it tackles the total value unlocked problem in DeFi. You've probably heard a lot of people talk about the total value locked in DeFi, and that's how we talk about the amount of money that's invested in the DeFi ecosystem on Ethereum. Now, once you stake money into contracts, be they insurance contracts or liquidity contracts, you effectively pledge your money, you lock it up in a smart contract, and then you can't access that money anymore. And you earn rewards for staking your money, usually in the native token. So if you stake Tezos tokens, you stake them to provide liquidity, for example, and then you get rewards in Tezos tokens. The problem is that when you stake these tokens, the tokens are locked and you don't have access to your money. But that's the problem. That's the problem that Ramp DeFi is actually solving. What they are doing is they are allowing you to access to stake tokens and to delegate the smart contract to Ramp. And that once you've delegated your smart contract to Ramp, you can then borrow money against it or get RUSD against it, which is a native token on the Ramp network, which means that you can lock your money, earn rewards for locking your money, and then borrow money to invest in other platforms, or you can even just stake the RUSD tokens. So what that means is that they've created a mechanism for you to use total value locked and actually to borrow against it, so to speak. And for me, that's fulfilling a massive role in DeFi. If DeFi grows to $250 or $300 million, then I think that Ramp may be a big player. Today, if you look at their website, and I'm going to quickly share the website with you. Let's look at Ramp DeFi's website. One second, I'm going to call up Ramp DeFi's website. Okay, so we've got Ramp DeFi's website, which I'm going to share with you guys now. That's Ramp DeFi's website. And if you look at their vaults today, it seems like they're integrated with Tezos, with IST, and with Tomo Chain. But apparently they've also integrated or integrating with Elrond. And that could be a big game changer because there's a lot of staking on Elrond. So I think they're solving a massive problem. In fact, I think that this is a massive fundamental part of the DeFi play. If we want to lock up value in DeFi, we should be able to borrow against it. That's how real assets work. You can buy a building and you can fund the equity and then you can borrow against it. And if the price does go down, then effectively they have a mechanism which cuts your position, sells your position, and they have very little risk. And over time, I think they'll get smarter and smarter and smarter on their risk tolerance. We have about 2 minutes, and I want to talk to you very quickly about the third small cap gem, and that's a token called LenDefi. LenDefi is the first platform that is being launched on Falcon Swap's launchpad. Falcon Swap is the project that creates smart transactions and reduces gas fees on Ethereum, and they are now launching a protocol called LenDefi. What LenDefi does is also very, very interesting. What they do, I'm going to show you guys this. Let me show you what they do. So LenDefi have solved an amazing problem. They are allowing you to have under-collateralized loans. Usually when you talk about loans in crypto, they're over-collateralized loans. And that means that you give a Bitcoin, which is worth, say, $30,000, and you can borrow $15,000 against it, and the lender holds your Bitcoin as collateral. LenDefi have turned the model upside down. They've said, no. If you give us $10,000, then we will allow you to borrow $10,000 and even more, $30,000 if you want. And you can invest it in any one of the assets on our platform, which today are Ethereum, WBTC, Uniswap, Link, Aave, YFI, and they're going to be adding in a lot more assets, which means that you can deposit 10,000 USD. You can buy yourself $30,000 worth of Bitcoin, enjoy the upside of the Bitcoin, and then repay your $10,000 loan. You can repay your $10,000 loan with the upside and the interest that you've accrued on it. So this is a massive play in the DeFi space. And what I'm going to do is tomorrow, I'm going to, because we ran out of time, I'm going to give you guys much more love and much more knowledge on this tomorrow, because that is all the time that we have for today, guys. Unfortunately, I hope that you've loved this content. I've certainly loved being here. I want to thank you again for making our channel the best channel on crypto and for helping us grow so fast. I'm Crypto Man Run, signing out. I'll see you again tomorrow.